one. Sale with a right to return. What is the meaning of this one? Understand. Ever purchased anything from Amazon? Ever purchased anything from Amazon? Tell me. Do you see just when you're purchasing, before every purchase, don't you think you see whether there's a return policy or not? Tell me, do you see it or not? Before every purchase, we see that there is a return policy or not? Tell me yes or no, so that if we don't like the product, we will return it off. Tell me yes or no. So now, I'll think of it practically. Let's suppose you have to purchase a laptop from Amazon, okay? And the laptop is priced at let's suppose dollar 10,000, okay, in Amazon, okay, sale price. And the cost of laptop is, let's suppose, dollar 6,000. Okay, now what happens? Think of it, guys. Come on, please think it very logically. Okay, now this is Amazon. This is Amazon, and this is the customer. Myself only. Okay, now what happened? I purchased, or you can say Amazon sold 100 laptops to customer, or let's not about VJ, any customer, okay, 100 laptops, okay, on let's suppose 26th of March, okay, and the laptops were sold with 10 days return policy, okay, and 31st March is the year ending. 31st March is the year end. Now think of this scenario and understand. Sale happens on 26th of March, okay. Now on 31st of March I have year end, and the return can happen within 10 days, means 5th of April. By 5th of April return can come. Okay, I have sold 100 laptops here. The Amazon sold 100 laptops here, priced at dollar 10,000. The cost of which is dollar 6K. The cost of which is dollar 6K for Amazon. Okay. Now comes the question. What is the amount of revenue that Amazon will recognize, and when and how? Okay. Amazon's see, whenever any entity sells any products, okay, and with a return policy, it knows based on the past history that how many laptops will be returned. Let's suppose Amazon knows that 10% laptops will be returned. Based on past history, Amazon knows this thing. Okay. Now, question comes, I'll 10% return. Estimated. It's not certain, it's estimated, okay? Based on past history. Now comes the question, what is the amount of revenue that this one Amazon should recognize? Let's pass journal entry. In journal entry, let me take blue color pen. In the bank, tell me, do you think generally whenever we purchase anything from Amazon, assume that we are paying it then and that time itself, right? So 100 laptops for 10,000 each. So how much it becomes? Tell me. 1 million, right? So in the bank, I have received $1 million. In the bank, I have received $1 million, which ideally I should have recognized as my revenue. But I cannot recognize the whole amount as a revenue as of now, because some laptops can be returned back to us as well. So what shall I do? What shall I do in that case? The standard says, to the extent you estimate that the laptops will be returned back to you, don't recognize the revenue for that. And if you have received the money for that, recognize that as a liability. Recognize that as a refund liability. So recognize revenue only to the extent you believe that this will not be returned. Now Tell me which concept is being applied here? Which concept is being applied here? Variable consideration. Variable consideration, right? If the consideration is variable, recognize the revenue only if you will. This will not be reversed when the uncertainties attached will be resolved, right? So now what happens? Though this consideration is not variable here, but the same logic applies here. Though the consideration is not variable here, but the same logic applies here, right? That it's a return policy. There is a return policy. Standard says that you can recognize the whole amount of the revenue, but don't recognize the amount which you feel that it will be returned. So rather recognize a refund liability for that. Since you have received the whole amount, as of now, don't recognize the revenue, but recognize the refund liability. So what will you do to refund liability? Now, what is the amount for that? So 10% is the amount, is the return. So I will recognize 10% as my refund liability. So amount will be dollar 0.1 million and dollar 0.9 million. Tell me guys, is it clear everyone? Is it clear? This entry is clear. But now we have to apply the matching concept as well. And now how will we apply the matching concept? So if we are recognizing the revenue to the extent of 90%, we will recognize the cost also to the extent of 90%. How? See, ideally we should have recognized cost as cost of sales account debit. How much? 6,000 per laptop, and we have sold 100 laptops, means 600k, means 0.6 million dollar, 0.6 million to inventory. Ideally we would have passed this entry to inventory dollar 0.6 million. But since, see, this revenue states only 90%, so we will record the cost of sales only to the extent of 90%, and the rest we will not recognize as cost of sales. We will reverse it and we will recognize right to return asset. You will say, sir, if you are not recognizing a cost, why not keep it as an inventory? We cannot keep as an inventory. Why? Because the goods are not with me. The goods are with the customer, right? Either we can have to recognize right to return asset, or you can say inventory lying with the customer. We can open any account, okay? The name doesn't matter, but yes, it should clearly depict that yes, the inventory is not with us, okay? Account debit, how much? 0.6 million, and it will become how much? Dollar 0.54 million, right? The 90%. So this is what is the matching concept. This is what is the matching concept. Is it clear everyone so far? Now, year end comes. Let's suppose till year end, none of the products were returned. Okay, and we don't know whether it will happen or not. Okay, I'll explain all the possible scenarios, guys. Don't worry at all. Okay, till year end, none of the products were returned. What we'll do? We'll continue with this same scenario. Okay, we'll continue with this one, and on 5th of April, again, assume that none of the products were returned. So what will we do? We will reverse. In that case 1, I'll write here case 1. None of the products were returned. Then what will we do is we will just reverse the refund liability and recognize it as a refund liability and recognize it as a revenue to a revenue. What is the amount? Guys? Come on, tell me. It will be a dollar 0.1 million, and also we'll do the same with the cost also, right? So what we'll write? Cost of sales account debit to right to return asset. That is 0.06 million. It's not 0.6 million. Just a minute, guys. Can you please rectify the amount? The amount will be 0.06 million. Okay, 0.06 million. Now, so this is what is the entry. Now, is this part clear everyone so far? Is this part clear, everyone, so far? So what happens when you purchase an asset and you don't return it off, or even if there is a return policy, the entity would have discounted your amount. Okay, would have discounted your amount and recognize the revenue after considering the probability element that you will return it off. But yes, once the return period gets expired, the entity recognizes the whole amount as revenue if you have not returned the goods or returned the goods. Is it clear, everyone, so far? Can you move on to case 2? Can I move on to case 2? Can I move on to case 2? Wonderful. Now, case 2. By the expiry date, let's suppose 5 laptops were returned. 5 laptops were returned. 5 laptops were returned. Now, what will you do in that case? So, refund liability is already booked. Now, tell me, we sold how many laptops? 100 laptops. We told that 10% of it will be returned. Means 10% of 100 means 10 laptops will be returned. But only 5 laptops were returned. So, what will we do? We'll debit refund liability account. Debit how much? How much? Dollar 0.1 million. 2. How much we need to pay to the customers? Tell me, how much we need to pay to the customers? We charge 10K per laptop multiplied by 5 is we have to pay dollar. We have to pay how much? Tell me, guys, come on. 0.05 million to the customer. Now the rest we are not returned. So what we'll do? I will recognize the rest as my revenue. I will recognize the rest as my revenue to 0.05 million. Similarly, I'll do with the same with the cost also. Now, cost of sales. Okay, or rather, I'll say, see, if the goods were returned back to us, what will increase? Tell me. If the goods gets returned back to us, what will increase? Inventory will increase. Our inventory will increase. Inventory account debit. Okay, now what is the cost of it? What is the cost of one laptop? 0.06 was the cost of one. Just a minute. Cost of one laptop is 6,000, right? Cost of one laptop is 6,000. So it is 6,000 is the cost of one laptop multiplied by 5 laptops is how much? $0 is how much? $0.03 million, right? Now, then cost of okay, the rest I will recognize as cost of sales because the rest were not returned, but I have reversed the cost for that. So I will recognize the rest as the cost of sales. To right to return asset was how much? I have recognized right to return asset how much? Dollar 0.06 million. That is dollar 0.03 million is as much. Is the cost of sales. I believe you are understanding these points. Guys, come on, can you please confirm? Can you please confirm? Is it clear, everyone? Okay, this concept, guys, is very much applicable in a practical scenario also. So I believe this point is of much importance, not only from an exam perspective but also from a practical perspective. So please give importance to this topic. Is it clear, everyone? Is it clear, everyone? Now, so just I'll write, see, though I have discussed it from all the perspectives, but what I'll do is I will write the standard, what the standard says for this one. So standard says on the date of sale, on the date of sale, when the transaction happens, recognize a revenue to the extent it will not be returned. Okay, any funds received will be recognized as a refund liability. Okay, similar for cost of, similar for cost as well. Okay, and you have to recognize the right to return asset. Now, when if the now I'll write it to this way. If goods are returned, if goods are returned during the return days, okay, or if goods are not returned, or if goods are not returned. So now if goods are returned, guys, if goods are returned or if goods are not returned, if goods are returned, then you have to say that, then you have to say that pay off refund liability that you have created, okay, then recognize inventory, okay. Now if goods are not returned, then reverse refund liability and recognize revenue, and recognize revenue, okay, and reverse right to return asset, and recognize what, and recognize what, tell me guys, recognize what, recognize cost of sales. Very good, recognize cost of sales. Wonderful. Is it clear everyone?